Hello, everyone. Welcome. Today is Wednesday, Fed Day. Turns out the Fed is more dovish than I expected, keeping rates the same until 2022, which I've heard. I find that interesting. I think they're more concerned about the market than they are the economy, but that's neither here nor there. We just play it like it lies and go from there. I do want to mention that the messages in this video are for informational purposes only and do not constitute investment advice. While every effort has been made to provide accurate information, we cannot guarantee the complete or timeliness of the info contained in the upcoming video. If you're interested, advisory services are provided through PVG Asset Management and Dennis Prost, and we will provide a link for Dennis's contact information. So with that said, I would like to spend a couple minutes looking at Thinkorswim and studies. This first study that I have was written by me. It basically tags the 5-minute high and low and the open and the close. And the cool thing about this is that it works on any time frame. If I take the 30-minute, it looks at the first 30-minute candle and draws the high and the low. But I basically trade on the 5-minute. Now, if you're interested, I'll provide a link to this as well. And basically allow you to import that into your Thinkorswim chart. Basically, this is what we call ThinkScript. You can tell it's a user-defined study because of this. But what I'm going to do is add some of the studies that Dennis uses just so you guys can get a feel for it. So one of them is a simple moving average. To edit this, there is a gear icon, and Dennis uses the 4, the 8, and the 34. And actually, if you want, you can change the color as well, but I'm not going to get into that now. And here's our 4-day SMA. Another one that Dennis uses is the MACD. Why are those MACD? MACD. And Dennis uses a little bit more aggressive time frame on that and changes the fast. Let me look for it. To 8 and the slow length to 17. And there's your MACD. So I hope these help. Use them as you'd like. Thinkorswim allows you to save study sets. Basically adding different studies and then saving the study set. And it also allows you to save grids. For instance, if you have a list of charts, you can save them and it will bring it up every time with these studies that you have selected. So I hope that helps. Unfortunately, today was not a great day for me. I went short here because the SPY broke below the 5-minute low. And then basically, as soon as it retraced, I got out and said, I'm done for the day. People have asked, you know, how to use the 5-minute? How do you use the 5-minute? Does the 5-minute tell you when to get out? How do you get out of a position once you're in it? And the 5-minute really just tells you, and let me clean up this chart. Add user defined. Toss, open, high, low. Okay. So there are several ways to, once you're in a position, to get out. And it really depends on your risk tolerance. You know, if you're relatively conservative, you enter in the short here, and as soon as it breaks or closes above the 5-minute low, you get out. You want to be a little more aggressive, see if it bounces below the 5-minute high, and that's your second area of resistance. But as soon as it breaks above that, you need to switch positions and go long. Now, another relatively conservative approach is look for closes on the 5-minute. A close below the previous close is a signal to get out. And if you had done that, you would have gotten in here and you would have gotten out here. Relatively quick trade. A somewhat more aggressive approach is to use time frames. Alan has mentioned, and these times are central time. So 10:30 or 9:30 central is a key time. 10:30 is a key time. And what you want to do is look for reversals around there. We happen to reverse at 10:50. This period between 11 and 1 are usually times when everyone goes to lunch. You know, the volume slows down. There's not as these violent moves. And, you know, and today is kind of an interesting day because here's Fed Day. Here's the Fed announcement. Notice this huge candle. We don't see those every day, usually just on Fed days. So that's kind of an anomaly. So, but like I said, I hope this helps. Like I said, one thing as a trader you need to figure out is your risk tolerance, your comfort level for getting into a position and letting it ride. I'm not that way. I look for closes below the prior close, only because that's how I've traded for quite some time. I'm trying to force myself to start looking for those key time frames, but I'm not quite there yet. So spend some time thinking on what makes you feel comfortable and how you want to trade. You know, if you have money that just you want to be aggressive with, enter a position and start looking at, check in the market at 10:30 Eastern, 11:30 Eastern. That's what Alan does. And that's, like I said, a fairly aggressive trading strategy, but it works. It's worked for Alan. I'm not the type that can ignore what's going on minute by minute on the market. So with that said, I'm going to turn it over to Dennis and allow him to show his charts, look at some option volumes, look at some charts, see where we're going, and go from there. So Dennis?
Well, thank you. Okay, this is the option station pro with TradeStation, and it's the Qs. I'm looking at the Qs on a 1-minute chart here, as you can see, for the last hour or so. As you can see, you know, we're heading down. A couple of things to look for, and it's nice what TradeStation does, is it actually shows you your put volume for the day and your call volume. And as we can see, the put volume is greater than the call volume. And then if you look at the put open interest versus the call open interest, it's almost 2-to-1. So there's still a lot of shorts out there showing you proof there's a good chance the market may continue down, you know, one more time. Okay.
Right. Yeah.
Going over to a daily chart, I'm going to focus on the Qs here and just stay with one. So I have posted here the 4 and the 8-day moving average. I'm going to show you how to do it on TradeStation. You go up to here under studies. Add a study. And I want to add a moving average here. And it's automatic, comes with the 9. And we're going to put in here the 21-day moving average. And I usually like this thicker one, so I'm going to make this thicker so I can see it. And then the color I like is red for Prism right here. So there is your 21-day moving average. And so there is 2 signs, as you can see here. The 4 crosses the 8, and then the 8 crossing the 21-day moving average. Okay, I'm going to add a couple more indicators just for you. Next one we're going to add is one called Parabolic SARS. Parabolic SARS right here. Okay, and these are just little dots, but we're going to change that and edit Parabolic SARS. And I am going to use the thicker ones here. And I like using a cross here, if you see that. And we should be good there with that. I want to make them a little bit bigger. Call me crazy, but we'll go a little bit bigger for you so we can see them.
Yeah.
There you go. That's the size I like. So you can see they stand out differently, and it's still telling you with the Parabolic SARS not to be in the market. And the last indicator I want to show you on my charts is a MACD, just like you had on yours. There's MACD. And then we're going to change the colors on this one as well. I like red and blue. I like thick lines here. And then my colors, I'm going to make this one red for Prism. And your MACD, we're going to make that a sky blue here. That's fine. And then our inputs. I'm going to use is 8 and 17. And there you go. So looking at the daily chart for the Qs, many people are saying, well, it's time to get in the market. We're up 400 points today. You got to get in. Okay. I rest with calm, cool things here. Give me a reason here to be in the market. Your MACD is not crossed. Your 4-day hasn't crossed the 8. The 8-day has not crossed the 21. And we still have the Parabolic SARS here. There is no reason for you to be in the market at this point in time.
Right.
At
Yeah.
least show one or two signals.
I was gonna say, if you see that last candle and you think bullishness, that's a seriously aggressive position, and that may or may not burn you, kind of thing.
So you or see some green candles. As you can see, my candles will turn green when it's time. And if you go back over here, you see where the you can see where the Parabolic SARS changed. Your 4-day crossed over your 8, and your 8-day crossed over your 34. It's time to go. You let it roll.
Right. Yeah.
So that's where we're at with the daily chart. If you want confirmation on that, look at a 30 or a 60-minute chart. I look at that at the end of the day and say, is it time to get in? Well, this, you got a wave 4 there. You can see there could be a wave 5 going down. Sometimes 30 minutes can be tricky. You'd rather go with a 60-minute to confirm. And in the not really too many reasons here. You get two reasons. Your Parabolic SARS is positive. Your MACD is positive. Really would love to see that 4-day cross above, or the 8 cross above the 32, and I'm in. Okay. The other thing, if you really get into this charting quite a bit, is I follow the Elliott wave, and I won't go into the too much here, but you can see we had a 5th wave here. You know, this is automatically set on my computer to tell me when we've topped out. And then I confirm it with the 4-day cross and the 8-day. And then down the road here, we see you've got the Parabolic SARS, and then we've got the 8-day cross in the 21. Okay. So all good stuff here. Talk about the cues a little bit if you'd like to, same thing. So looking at this chart here, I really don't see a reason to be in the market. We still have red candles here. And you can see the 4-day has crossed the 8, and then you can see the 8-day has crossed the 21. Okay.
Yeah, so the SPY is bearish as well. Look at all the red charts.
Yep. I don't even have to open up my candles with the indicators, because even on a daily chart, so it's your 8, your 13, your 21.
Yeah. I mean, even though we had a bullish day today, you know, and it was really due to the Fed, we did sell off at the end. You know, whether or not we bounce and hold on Thursday, it still is, I think, pointing to a red Friday.
I don't know what it is with the chairman of the Federal Reserve, that they always wanted applause that they did something good. And so they pushed the stock market up. It's crazy. You know, and they really had not much good news to share. Then, you know, oh, we'll keep the interest rates the same for a little bit. But every time Janet Yellen spoke, or Jerome Powell speaks, they always want applause that they did something good.
Yeah.
And it's really not good.
Right.
So,
yeah, right. Exactly. Yeah. We, yeah, I mean, and I don't ever know what happened. I don't even know what happened to the big I word, the inflation. You know, whether not they mentioned that. The House of Representative, this big spenders, have approved the debt ceiling. But this looks like it's going to get in trouble with the Senate. And I don't want to get into the politicalness of it. It's basically just a football that gets tossed around between parties of the debt ceiling. But at the end of the day, both parties do raise the debt ceiling. But what the Republicans in the Senate have going for them is that Democrats are in control of both, or Democrats are in charge. So if the debt ceiling were to fail, it's the Democrats' fault. And I don't know if we want to get down that road if that fails, because then you start looking at default. So yeah, it's unfortunate that we're in the position that we're in, and we've been in it for quite some time. So interesting times coming up.
That's for sure. So, and one of the important things that we do with PVG is we kind of hedge our portfolios. It's extremely difficult to trade the markets when you have such light volume in the market. And there's some days you just don't know which day you go. So you kind of hedge your portfolios going long and short in the market. So we hedge it with inverse funds along with the long funds, you know, to minimize the volatility in our portfolios.
You're mainly in ETFs.
Yes.
Right. Okay, sounds good. I don't know if there's anything else.
I don't have too much else. Just make it short and sweet today.
Yeah, like I said,
I don't want to overwhelm people with too much information.
Right. And we'll see where we are tomorrow and Friday. But like I said, play it like it lies. Hedge if you can.
Mhm.
I'm oh, I'm to the point of, let me take this back for an instant. Because I want to show what I have.
Okay.
I have, and I'll show you guys how to set this up if you're interested. I have this tick reading chart. And the ticks are basically, this is for the New York Stock Exchange. It basically lists the positive ticks versus the negative ticks. So, and if you hit levels, 750 is buying, a lot of buying, and 1,000 is extreme buying. I used to be a John Carter member, and when he used to say is when if he ever got an alert that said ticks were greater than 1,000, he would short the market because that extreme buying cannot hold. And the same for if they're negative 1,000. When they're negative 1,000, that's extreme selling and that cannot hold. But for the past 2 or 3 days, we've seen ticks up in the 1,400, 1,500 range. So I have these alerts that basically let me know when tick readings hit that high. And like I said, if you look at this 750, we've hit this so many times today that I'm getting ready to turn these things off. But the way that you set this up in Thinkorswim for an alert to stay is to go down to the options and alert for reverse crossover, create a silent alert. So what this will do, and they are not expired. So what this will do is if you hit a tick, if you hit this alert, that alert will stay active for the next time it hits those levels. It took me a little bit to get this, so I hope this helps. But I basically just have the ticks if the marks are above 1,000. I notify with a sound, and I submitted it whenever, and they're not expiring, and they create a silent reverse alert, and that will keep them active throughout until you basically turn them off. Whereas I know normal alerts, once they're hit, they will roll off. So I hope that helps as well. So with that, I'm going to bid you guys a good night. Dennis, thank you again for your insights. Thank you for showing your charts. And like you said, there's no signal to go bullish in this market, especially if you're going to hold for longer than an intraday trade. So be cautious and tread lightly. Thanks, everyone.
Well, thanks, Brian. Bye.
Yep. Bye.